Sachin Dixit with us this morning. He is a lead Internet Research Analyst on JM Financial Institution. And of course, we've invited him to speak about Paytm. I don't know if you're tracking IndusInd at all, Sachin?
No, I lead the internet practice at JM, so I'm
Yeah.
on more on the internet side.
Okay.
Yeah.
Okay. So on Paytm, how do you look at this exit from Antfin? Is it an entire exit, and does it clear some regulatory hurdles for Vijay Shekhar Sharma and what he wants to do with Paytm going ahead?
Potentially, so basically, this is a clean out trade from Antfin, right? We saw the last block that happened roughly 3 months back, wherein Antfin sold another 4% stake. In this, like post this, basically, Antfin reaches zero in terms of share capital on Paytm. While obviously it's not clear how the regulator is looking at these things, but historically we have seen that Chinese invested entities had suffered at the regulator's hand in getting some regulatory approvals or not getting them rather. So this could potentially clear the way for the company getting some of the regulatory licenses which have been due over the course of the past few years. That's certainly a possibility.
Sachin, the question that begets is that, I mean, in all of these businesses, right, which are PE funded or global names funded or held, these exits would happen at some point of time. But the underlying business, has it gotten traction enough and turned the corner enough for you to recommend to your international and institutional clients for either staying invested or buying at dips, etc.? Because, I mean, this quarter was that, you know, I remember that when the results came out, we showed the clip of Vijay Shekhar Sharma dancing, right? It was that kind of a number. So I'm just trying to think, do you believe that's the case now for Paytm?
I guess the dance was from a very old.
Of course it was. Of course it was.
But nonetheless, the results were good. So what we have seen in a lot of these internet stocks is that most blocks happen when the company's actual operating performance also starts to improve, because that's when these large blocks get absorbed. Right, as I was saying, like roughly 4% of stake of Antfin got sold roughly 3 months back, which again got absorbed. Well, the stock has actually been higher from where that stock happened, from where that block happened. And even now, because the quarter's results were good, operating performance going ahead also is anticipated to be good, which is why I'm not running the block, but I'm guessing whosoever is running will see decent demand in getting the right traction for this block for incoming investors to come and make value as the stock progresses further. Largely, when you think of that performance, now with the company turning PAT profitable and operating at almost like this mid to high 50s sort of a contribution margin guidance that's provided by the company, seems to be decent visibility that fixed costs, which are largely growing at, let's say, 10, 11, 12% at best, and revenue growing at 20, 25% at least, basically gives you decent visibility on operating profits rising very, very sharply.
Sachin, then last question from my end. I just want to understand whether all of the major headwinds would be out now. And from everybody was talking about this whole convoluted transaction with Ant at some point, and maybe that had slipped under the radar, but now with that heading out of the way, would you say that all of the major headwinds are out? And would you say that it's still a buy at this point with the visibility that you've just pointed out to?
Sure. So I do not see any major headwinds that way, but obviously there are businesses which Paytm used to do, which are not back yet, right? So we have also published a note some time back on this, that there are a bunch of regulatory triggers which can come on this name. So there are no headwinds, but I believe that there could be tailwinds if any of these approvals start to come in favor, or basically there is any sort of monetization that comes on UPI transactions. Right, obviously, they would have seen that news where ICC Bank is looking to charge payment aggregators. There is talk of RBI governor talking about things like that UPI needs to sustain itself. So while I don't know how regulator is thinking of it, how finance ministry is thinking of it, but there needs to be some sustainability that needs to come to UPI transactions, and which could be a very big trigger for Paytm. On top of that, obviously, the licenses that we talk about, the payment aggregator license, there is also a potentiality of Paytm wallet coming in, which has been a big driver in Paytm's monetization as well as profitability in the past. Those could be key triggers, those could be key tailwinds. I do not see any headwinds in the near future. So that's there. The one thing that I'll probably still caveat is that a lot of profitability for Paytm has been coming on the lending side, and wherein Paytm has done brilliantly in terms of scaling, maintaining the quality of book, and now even moving to non-FLDG arrangements, where lenders are comfortable moving to those arrangements and still growing. So I think if you see anything happening wrong on merchant lending side, whether the sector slows down, if there is some book erupting and anything, that could be a headwind for sure. But so far, we do not see any signs of that.
What is the target price that you see for Paytm now that this is out of the way, Sachin?
So we have a 1320 rupees of target price. So we still have decent upside on that. And obviously, we do not bake in all the tailwinds that I talked about in the target price because these are all still optionalities.
Okay, and is this a buy at the current price for you? Would you look at a Paytm right now at 1078?
Yeah, it's a buy. We
Okay.
have a buy rate.
Okay, so it's a clear buy at 1078 for Sachin Dixit. Thank you so much.